All right, so today what I'm going to do is I'm going to be covering a number of springs and how price acted. All right, price and volume. So the first thing is you have a higher time frame, you have a middle time frame, and you have a lower time frame. So I'll show you how to combine all three. So higher time frame, you need the rotation. So for springs, you need an up rotation. So this would be your daily. So basically price is going up on a rotation. You can measure this, or you can do it using a zigzag indicator. It will show that the move is going up. Zigzag indicator will show you that. Any wave indicator will show you that. Middle time frame is where you get the spring. And by spring we need an attempt to break down. So prices right there, we have an attempt to break down. Okay? And on lower time frame, you basically have your chain, what did I do? You have your change of behavior. All right. So on the higher time frame is your daily, and you have an up rotation. The key is you use 3 time frames, and the logic of this is that the daily traders on the daily time frame, they have targets they want to reach, and on the middle time frame it's going the other way. So what they do is they come in and save the day by buying it and restoring the trend so that it can go to its intended target, which could just be a higher high. Again, you have daily up rotation, middle time frame breakdown attempt, lower time frame a change of behavior, because the higher time frame traders are stepping in. It's because the higher time frame traders are stepping in, they're the ones causing the change of character or the change of behavior. All right? High time frame up rotation, middle time frame break down, and lower time frame you have your change of behavior and change of character. So what are the 3 time frames? The high time frame would be a daily, the middle time frame would be a hourly, and a lower time frame can be a 3-min. All right? So now that you understand this basic strategy, it's relying on the higher time frame stepping in and buying when the middle time frame attempts to go in the opposite direction. So the higher time frame is correcting that breakdown attempt by stepping in on a lower time frame and buying it all up, buying the break all up, so that it can continue to go higher. It's a very logical strategy, and I mean it's just common sense that higher time frames are stronger than lower time frames. So when they buy, you can see they're buying and they're trying to take it back up to go to that higher high trading objective. So it's very simple. Now let's take a look. Where it says SP, you have spring attempts. And what we want to do is we want to observe what happens on the spring attempts to see if they get in. All right. So we'll start off with this first one. You had a rally, it pulled back. Right here, you had an attempted breakdown of the 69.75 when price broke it and went down to 69.71. So what happened on Friday, last trading day? What happened? So we go to Friday, just scroll all the way back, and you see that as price broke down below 69.75, it's in a spring position. We don't know what's going to happen. We have no clue. But we do know one thing that's already in this, is that the higher time frame is in an up rotation. The daily time frame is in an up rotation. And this middle time frame is attempting to make a lower low. Will they step in on this lower low is the question. And to see that, we go to a lower time frame to see if they're buying, right? So higher time frame is in an up rotation. Middle time frame breaks this low to make a lower low. As it's making a lower low on this hourly chart, we go to the 3-minute to see if there's heavy buying that can reverse and continue the direction of the daily. And the answer is right there, where you have the biggest. Just look at the volume. You see how it sticks out? 192. That's 192,000 contracts. That is not your intraday trader. That is your higher time frame, someone from who knows where stepping in. That's not noise. All right. So when the middle time frame, which is the hourly, tried to break down, you had someone step in and correct that attempt to go down, because the higher time frame daily is in an up rotation and wants to keep going up. So they're not going to let the breaks work, because if these breaks work, they're going to change the trend, and the higher time frame traders will not get price to the objective that it's supposed to go to, that they're trying to take it to. They have an objective, they want to take it to that objective, and whatever it is, could be a higher high. And if this middle time frame succeeds, it will prevent that objective from being reached. So as it breaks, these guys from the higher time frame, they step in and buy. And buy they did. Look at the volume. 192,000. This is the biggest price wave in 49 waves, at least 49 waves, and biggest volume in at least 49 waves. Again, biggest price and volume and in at least 49 waves. I'm capping it at 49 because it's enough to know that that's a lot of buying pressure. You don't need more than that. So I'll just cap it there, but this is it. Look at this. Look at this buying activity, right? So we know that this attempted breakdown failed. This attempted breakdown on an hourly, while the price was in a up rotation on the daily, failed, and we're more likely to continue going up. So it goes down, breaks the low. These guys step in and buy. Why? Because the market is in up rotation on a daily time frame. So they want to keep taking it higher. That's it. Now we'll go to the next one. This is a different type of signal, but there's some signals. There's a number of signals, but we're just looking at springs. So the next spring is 69.77. Take a look at that. So this they did come in, but it didn't last. They did come in here, and it didn't last. It just didn't work. So as they broke the low, price shot up. And I guess this was too late. It's 3. Yeah, it's like 3 o'clock. So that's too late. Probably no one's going to be there to support. All right, let's go to the next one, which is right here. That's 69.40. Where is that? Time of day matters. All right. So here we have a spring, and they stepped in. $49.33. Biggest in 49 up waves, biggest in 33. And actually they stepped in earlier. There was some demand supply back and forth, but they stepped in here. As the price went to this level, they stepped in. And then when it did a respring, they stepped in again. And the time is important because you want it to be at an active time. Because as you see, you can't have it like 3 o'clock in the day or some weird time, because there's no one there who's going to buy it. So finally, we'll take a look at one more at 69.31. If I have all the... So here, you have an attempt to break down. But again, remember the higher time frame, which is a daily, in this case, is in an up rotation. If it's in an up rotation, these guys will not let the market break down. They have a higher high that they want to take price to, so they're going to step in. And the strategy is this, that the higher time frame daily traders have a higher high objective they want to take price to. So on an hourly, when attempting to break down, the higher time frame traders from the daily are going to step in, and they're going to buy, so they can take price back into the direction that it's supposed to be in, so they can take it to their higher high objective. So here you have the start of a high, I don't know, they want to take it higher. So they want to take it higher, and it dips below 69.40 to 69.31, and there's the demand. Bang, done. All right. Very straightforward, logical strategy, where they're buying the break. Because if they don't buy the break, they won't reach the objective. It'll continue to go down, attracting more selling, and they won't reach the higher high objective. So there you go. There's your demand. Okay. Now here's the other thing. If you're using one time frame, that's probably the worst thing you can do, because there's no strategy on one time frame, especially if it's an intraday time frame. It's a dumping ground for all other time frames. So you need to put it into a certain context, right? So for example, this strategy says that, I'll give you another example, that if your price is in a down rotation, what should you do? You should look for up thrusts, right? This was nice. Let's look for the up thrust. Here you have an example of price now is in a downtrend. Or forget downtrend, down rotation. All right, so on the daily, is it an up rotation or is it down rotation? That's the first question. Is it an up rotation or down rotation? Because we're not going to mess with the daily traders. We are relying on the daily traders. That's your edge. The daily traders are your edge because they have lots of money. So when the daily traders are trying to take it down and price is making a higher high, guess what? We want to see if they're going to get active and start the selling to bring price back into the down direction. And you have this right here, up thrust, right? Because price went up and cracked 69.35. As it cracked 69.35, the first thing we need to ask ourselves is, first of all, where are the daily traders taking this? They're taking it up or they're taking it down? How do you answer that question? It's by taking a look at the daily rotation. How do you know the daily rotation? You know it from the zigzag indicator. The zigzag indicator will tell you the daily rotation is up or down. It's only two states that the thing can be in. It's a binary indicator, up or down, up or down. So the daily is in a down rotation, and we have an hourly that is making a higher high. So now daily doesn't want that because they want to take it to a lower price objective. So if they want to bring it to a lower price objective, they will step in. And that is the premise, that that is the assumption that they will step in. We want to prove that assumption by looking at the chart and seeing if they step in. So, do they step in this up thrust position? Answer is yes, right here. And look what happens, crack. Now, the price goes up, and the rotation for the daily is in an up rotation. So in an up rotation, we want to see if the down moves crack. And when the down moves, meaning the lower lows, occur, they're in spring positions, and we want to see if they're buying activity. So the daily, they defend it. And I already showed you the example where they did defend it. Anyway, I'm not going to go through that again, but let's recap. All right. As I explained, you need 3 time frames. The first time frame is the daily. You could also use this on higher, different time frames. The higher time frame is daily, and we want to know the rotation. The rotation, okay? You need to know the rotation. Is it going up or down? Zigging or zagging? The daily is zigging or zagging. Then the middle time frame, which is the hourly, you want to see a move in the opposite direction. So let's say the daily is in an up rotation. On the hourly, we're looking for a spring, which is nothing more than an attempted breakdown. It's an attempted break. All right. Then on the attempted breakdown, what we want to see on, let's say, a 3-minute, you could also use a 5-minute, you want to see a change of character or a change of behavior. because what this signifies is not like some random shit. What it signifies is that the daily guys are stepping in to protect their campaign. They are protecting their campaign because the daily have an objective. Their objective see, I'm gonna write it right now. Daily time frame traders will buy the breakdown, and so that's why we're looking for that breakdown, which is your spring, which is an attempt to break down, and we have a premise that the daily traders want to take it higher, and then we go to lower time frame to see if that thing really does occur, which is your catch or your change of behavior. Okay, it's a very common sense strategy. We are relying on daily traders to step in on hourly time frame breakdowns because the daily traders want to take it to a higher price objective. So and this is nothing new. This has been around for 100 years. I'm just explaining it in a logical, easy way, I hope. All right, but yeah, you need 3 time frames: daily, hourly, 3-minute or 5-minute. Daily is in an up rotation. Hourly tries to break down. Daily comes back in, buying it, and you can see that on a minute-based 3 or 5-minute time frame as a change of character or change of behavior. And you can put it all together in terms of indicators and stuff like that, which I've just showed you. Done. Thank you.